live on YouTube. Making videos, guys. Say something smart. I'll try to do the same. Let's check some news. Man, that was a mover, wasn't it? So forexfactory.com/calendar each and every morning, first thing. I hate getting caught by news. And it was funny because my brother and I were both looking at the market and we were talking, and it was 8:26 or 8:27. And we were both like, hey, look at that. There's a long trade. And we both said, if there wasn't news. And sure enough, news spiked the heck out of it, guys, and it dropped. And that's why I don't trade into news and why I make sure that I know when the news is, because I don't want to get caught up in it. And Rob, nope, didn't hear anything about your mayor or governor sucking. But you guys don't like guns in Chicago, so what else you gonna... I mean, that's, you don't even have to say that they suck. It just kind of happens there. So every morning, guys, it's news. Jen, what's this Mr. Novak stuff? That's my dad. Good morning. There we go. I like that. Hey, what's up, Marty? Good to see you. All right, guys, so we've checked our news. It is nothing else really going on. Hey, Nanda. Unless you're a natural gas trader, I suppose, or a 30-year bond auction trader, no more high-impact news. So we're going to get to the learnings, guys, and all of the learnings is coming. 8:30's already happened, Nanda. Here, let me go back. So my computer is Eastern. So all of those PPIs were 8:30 a.m. Eastern, 7:30 Central. So they are rear view mirror at this point. We have already seen them and done them. Yeah, that was the spike. That was the news. So when you're checking news, make sure that your time frame, that your computer, because if you're in Eastern, this automatically shows up Eastern for me. Guys, there's a filter button right here. And you can make sure that you are on the US. You can make sure that you're looking for high and medium impact. And then you can also make sure, where does it tell you the time zone? It tells you the time zone somewhere. There we go, right there. If you click on that, it'll tell you what time zone you're in. So I'm in Eastern. So even though I'm sitting here in Texas and it's only 8 a.m., my computer thinks it's 9 a.m. because I'm lined up with the Nexgen servers. Because I want my midnight to be the same midnight as what they see, so that my calculations start, so that I line up with you good people that are all on Eastern as well. So we're going to go to the Fibonacci day trading page. That's us. We're Fibonacci day traders. Guys, this is the Nexgen T3.com. This is where everything comes from. I try to fool you guys into believing that I'm intelligent. I'm not. I just regurgitate all the brilliance that my brother has put together, that he's created over the last 27 years. So everything that I talk about comes from the trading guide, really. And the trading guide is just this right here. I mean, understanding indicators, trend and direction, termination conditions, entries, high probability trades, trade management. I mean, everything. Prop firms. We're going to talk about prop firms today too, guys. I had an awesome conversation yesterday with someone about it, and they're like, I'm just not sure what they are. And I said, well, hell, let's fix that today. So we're going to talk about prop firms a little bit. Don't let me forget. And then, guys, this is kind of the, hey, let's build a foundation. And then this is the test the foundation that we built. And this is the, oh, let's go. Let's go to the next level. Let's see more stuff, do more stuff. So everything that I talk about in this room, you will find the answer here. I do my best to not keep secrets from you guys. We're in the common terms section. I'm going to scroll down. Close your eyes. Don't want anyone to have a seizure from the super scroll. We're going to talk about this. This is the high probability trade. Hey, Sid, good morning. And man, I'm going to tell you a couple things about the high probability trade. I'm going to try and be as thorough as I can today. The high probability trade is a trade that typically wins 70 to 80% of the time when you follow the rules, guys. That win percentage, those wins versus losses, This creates confidence through the memory of success. There is this cool little adage that says that. When you begin to remember your successes, you begin to become confident in the things that created them. And that's exactly what we're going to do today. Is we're going to talk about this trade that has more successes than failures typically. Not that losers are failures. This is a trade that is, it's your first trade. It's your foundation trade. It's your, all right, I'm new to Nexgen. What's my best course of action to become successful with the software, to find my way and navigate through becoming a day trader? Well, guys, it's learning to read your indicators. And learning to read your indicators, that's my goal in this classroom. You guys think I'm trying to create all these amazing day traders? I'm not. I'm trying to create an armada of chart readers, of people that just look at their charts and say, wow, look at these advantages. Look at this pattern. Let's turn it into a trade, guys. Chart reading, 90% of your day. 90% of your day is chart reading, guys. 10% of your day is trading because you have advantages. And what we do with this high probability trend trade, it's a pattern. That's all it is. It's a pattern. You guys that are in my age group, if you're anywhere near 50, you remember back in the 80s, almost every video game had a pattern that lets you be successful. Whether it was making the Galaga guys not shoot at you, whether it was being able to avoid the ghosts in Pac-Man, whether you remember how you could avoid the barrels in Donkey Kong, guys. There was this pattern. And once you learn the pattern, man, you made that quarter last forever. Morning, Bob. Gary, I am a pup. I am a low years, high mileage version. Morning, Jeffrey. Good to see you too. So guys, I want you to think about that. Every time you followed the pattern, you found success. And when you deviated from that pattern, when you sidestepped the plan that had been proven to win, that's where people struggle. And guys, day trading is a lot like that. It's almost like it was designed for our generation, that Gen X that grew up on video game patterns. So you're going to learn to read your charts. Your charts, they're going to identify the pattern. And once you're good at it, good morning, Philip. Good to see you. You're going to understand things like where the market is likely to continue. And when I say likely to continue, I mean if the trend is up, where it's likely to continue with that uptrend, or the trend is down, where it's likely to continue with that downtrend. This actually becomes your entry first for the high probability trend trade. Eventually, it becomes your entry for the HVA trade, for the momentum trade, for the white bar trade. Gary gave us an example of one of those today, I think. We'll see it. And then you're going to understand where the market is likely to go. And guys, putting targets in the right spot. Understanding areas that could stop the market. Ooh, there's that next one. Understanding where the market is likely to stop. Guys, you're going to see these. You're going to know these. You're going to understand these. You're going to know where your target belongs. You're going to understand where your stops go. And then the hardest thing you'll ever do is put your targets where they belong and put your stops where they belong, because it means that you have to squish down that emotion and that opinion and that fear and that greed. And you just got to learn how to get paid with the least amount of risk. And that's what we're going to do. We're going to learn how to manage risk before we ever manage profits, guys. And we're going to do that with the high probability trend trade. This is your foundation once again. And then Ron, your nickel is coming to you. Guys, this is not your get rich trade. This is not the one that happens all day, every day. This is the trade that teaches you to identify advantages, guys, because advantages should be why you get into a trade. Having a statistical advantage, trading a pattern that has been proven to win more than it loses. So there's only 3 rules on this because simplicity is golden. Your first rule, strong trigger lines. That's going to give you the advantage of momentum. Your second rule, terminations false. That's going to give you a clear path. That's your advantage. The final rule is specific to the high probability trend trade, and this is going to define your entry area. So it's easy to say, I want to take a trade. I want to make money. I want to get into the market. I want to buy a Corvette. I need a new mansion. I need an extra girlfriend, right? Guys, a trade is none of your desires, and a trade is nothing more than piecing these advantages together. So the equation for a trade is momentum plus a clear path plus your entry area. So what we're going to do is we're going to break down these 3 rules. We're going to identify them. We're going to talk about them until you're sick of hearing about them, and we're going to commit them to memory, guys. And these 3 rules, they happen on 2 charts because, again, I'm not smart enough to look at too many things. The large chart leads the way. The large chart will tell you if it's time to look for an entry. The large chart is going to define the direction in the market. It will show you rule number 1 being met, so you have that advantage of momentum. And the large chart is going to show you these areas, those likely to stop areas, those problematic areas. And the cool thing is you're going to see them long before you get to them. And I'm going to give you a very easy recipe to know when you shouldn't trade into them. So the large chart leads the way. It's a very broad stroke of a brush. It's a slow moving chart. It's difficult to see change on the large chart. And to be honest with you, all we really need is 1 bar on the large chart. 1 bar is going to define direction, momentum, and areas, guys. And once those rules are true, once rules 1 and 2 have been established as valid and met on the large chart, you're going to turn your attention to the small chart. And the small chart is a refinement chart. It's a fast chart. It's like an X-ray of that 1 bar. This 1 bar, we're going to break it down, and you guys are going to refine and pinpoint where the market is most likely to continue for that high probability trend trade. And it's going to reduce risk, and it's going to increase profit potential. And rule number 3 is on the smaller, faster chart. It's your entry chart, and it looks like this. Looks a little something like this, guys. 1 bar, put a big black box around it, right? That's all we're looking at on the large chart. And this large chart is telling me down, down with strength, potential to break. It's giving me all this great information that says, hey, Mark, guess what? We're trading right here. Let's look for an entry because your rules are met. And guys, the bottom of that bar is the beginning of a pullback. And the top of that bar, that tail, is an area inside of favorable large triggers. And guys, this refinement process puts you in right where the market is likely to continue. It's going to help you reduce risk. It's going to give you more room. And all of this happens inside of 1 bar, guys, because the 1 bar is the big crowd, the large crowd. It's the people that move the market, that create trends, that establish momentum, that react at these areas. Guys, the large chart leads the way. We want to be on team large chart. And then the small chart is it's this small crowd. And these guys love to fight the large chart. Good morning, Miss M. And sorry, my kid was trying to call. He's like, I thought you started at 9. I start at 9 Eastern. These guys fight. When these guys say up strong, nothing in the way, there's these deep pocket yahoos that create what we call a retracement. And the retracement is just this little shove against everything the big crowd wants. Guys, they fail 70 to 80% of the time. You're going to be able to pinpoint right where their failure is most likely to happen. That becomes your entry. And guys, if they're losing 70 to 80, it gives you the potential to win 70 to 80. And once again, I'm going to say it. This is not your only trade, guys. This is your first trade. So I want you to really dedicate yourself to understanding the advantages associated with this trade, because once you do, sky's the limit. Once you do, the other trades jump off the page, the management becomes easier, and honestly, the patience goes up a lot because you begin associating problems with losing money, and you choose not to trade into them. So there is a step-by-step path to becoming a confident trader, ASAP. I like to say ASAFP, but that's just me. It begins with posting your trades in the class. So guys, if you've never posted in my room, I want to show you something. When you downloaded your demo, you got TechSmith Capture. And TechSmith Capture is a free tool. It's a big red button that says Capture. Guys, if you've never posted in my room, I want you to take a picture and drop it in there. And I don't care what the picture is. Let it be your puppy. I love dog pictures, guys. Send me your dog pictures. You're going to mash down that capture button and you're just going to click and drag. Whatever you want to show me, you're going to put it in that little range. As soon as you release it, it's going to say, hey, Mark, do you want to take a picture? And of course, I'm going to say, well, yeah, I want to take a picture. And I click the camera button. And guys, it gives me what's called the image preview. This is exactly what I took a picture of. This is what I'm going to drop in the room. And check this out. If I click on the arrow, that's click and drag too. So I can click and drag and I can make a big arrow, a little arrow, a down arrow, an up arrow. I can do shapes, guys. These are golden for showing me entries and exits. But the most important thing you can do is click and drag and make this text box, this call out box, because this is where we talk. This is where you tell me what you see. This is where you tell me why you did what you did. So if you are in my room and I've never seen a picture from you, I want to see it right now, guys. I want you to click that copy button and it's going to put that picture on your clipboard. Come over to the chat box and smash that bad boy in there. And guys, this is how you get your private session with me. Because what you're going to do is you're going to post in the room when you simulate, when you practice. When you have questions, you're going to drop it in the room and I'm going to see your picture and I'm going to say, okay, let's talk about it. Let's talk about what you saw. Let's talk about what you did. Let's talk about where you did it. And guys, if you give me 3, 4, 5 pictures in this room, I'm going to start to recognize patterns in you. I'm going to start to recognize maybe you like to jump in a little early. Maybe you're hesitant to take profits at key areas. Maybe you hold longer than you should. Guys, we're going to work through all of it. That's my promise to you. If you drop it in the room and let me see what you're doing, I'm going to help you do it better. That's my job. The second thing is use the spreadsheet, guys. Nexgen gave you this spreadsheet. It's 4 tabs. It's trade tracking, it's basic rules, it's clients trade, it's build your plan. So this spreadsheet is what you're going to use so that you can begin to recognize the looks that you're going to commit to. What are the looks you're going to commit to? It's that rules met pattern. You've got to learn the looks. That's what makes it easy. That's what slows down the market. That's what takes away the fear. And guys, recognizing the look is the first step. Learning to trust the look so that you never hesitate, so that you're insistent on waiting for your rules to be met. That's what's gonna pay dividends. So your spreadsheet, let me show it again. The first tab is trade tracking. And this trade tracking is just a trade journal. And it's cool because you can put what type of trades you're taking because we all take different trades, right? We're gonna talk about the high probability trend trade. There's gonna be a 50-50 trade, guys. There's momentum trades. There's HVA trades. There's all sorts of trades, but the high probability trend trade teaches you to recognize the others. You're going to take that picture and you're going to drop it in and you're going to say, all right, here's what kind of trade it was. Here's the picture. Here's the advantages that I had. Momentum and clear path. These are the 2 that I want you to focus on. Having rules 1 and 2 met every time you take a trade. I don't care what your entry looks like, but if you insist on momentum and clear path, life gets really easy for you. Talk about whether you won or lost. It feels good to type it in there. And what the final thing is the feedback from class. You won't get any feedback from class if you don't post in class. It's weird how that works. But what's cool is it might be this is the perfect entry. Never miss this one. And guys, if that's your feedback, drop it into your personal trade looks because you're building your plan that is going to help you succeed. If it says not from a good top, manage aggressively if divergence prints, maybe you mismanaged the trade, maybe you broke a rule. Guys, make sure that you look at that. And what you're going to notice is you might get the same feedback 3 or 4 times, guys. This is your thing. Early entry, early entry, early entry, into a termination, into a termination, into a termination. And you're going to go, oh my gosh, I didn't recognize that I was doing this repeatedly. And this is my autobiography coming at you right now. Into a termination was my Achilles heel. And I'm not going to lie, I didn't study termination conditions. I had no idea. I was self-sabotaging. But with a little bit of feedback from class, and most importantly, going back and studying the pictures and studying the trades and looking at the feedback every morning asking myself what worked, what didn't work, what felt easy, what felt forced. Guys, what you're going to realize is that you're going to recognize the patterns bringing you success. You're going to recognize the things taking success. If you don't, I will if you post it in the room. But I never, ever miss out on this morning study session. It takes me 2 to 3 minutes to look at the trades from yesterday, and it gives me a clear path every day of what I want to focus on and what I want to avoid. So use that first sheet. The second sheet is your rules. And I'm going to give you a little handout so that you can get the most out of this section. All it is in green is your rules being met. Bob, you and I are going to be BFFs. That is a gorgeous dog. And more importantly, now I know that you can post in the room. That's Buddy. All right, I like Buddy. Guys, I get giddy about the dog pictures. So even if you just want to show off your dog, go right ahead. In green are the rules being met. What it looks like to have your rules met. Exactly. And then in red, it's what it means when your rules aren't met. Exactly what it looks like to be in that, oh my gosh, it's not time to take a trade phase. The next tab is the client trades, guys, and this is just a gold mine of information. There is the entry sequence for high probability trend trades, long and short. All the green section is you guys being brilliant in my class, taking those lessons and finding ways to succeed, following the patterns. And I want to show you something about these. These are for you to study. But one thing that you'll notice in here is Jose's perfect high probability trend trade short didn't work. And you're asking yourself, Mark, did you really post a loser in our study guide? You better believe I did, guys, because this is the perfect loser. This is the loser that has every advantage, the perfect entry, the ideal stop placement. And guys, that's a reminder that we're not trading for victories, we're trading for patterns. And anything that wins 70 to 80% of the time will lose 20 to 30% of the time. It doesn't mean it's a bad trade. It doesn't mean it's a failure. It just means it didn't work. It's a cost of doing business. And when you post in the room, guys, sometimes I'm going to tell you it's just a cost of doing business. But it's important that you don't think you did everything right when you didn't. So post in the room and get that feedback. I'm getting a lot of chatter about the NASDAQ lately. So guys, I've started refilling my NASDAQ section for you. We're going to talk about it today. I even opened a NASDAQ chart. There's management. And guys, I will give you a plan that teaches you how to take this entry and manage it with the goal of getting paid. And then your management will grow as you grow. And then the great thing is when you start to learn these advantages, when finding momentum becomes second nature, when understanding termination conditions doesn't take a lot of your mental capacity, you're going to start to see patterns jumping off the page at you. You're going to start to see your next trade, that next pattern, that way to manage. Guys, take pictures of the things that you seem to see more than once and drop them in the room and go, Mark, I keep seeing this look. Is this something, or am I just crazy? And sometimes you're crazy, but usually you're onto something. So let's talk about it. So this is what we're going to do. My promise this morning, by the time you leave this classroom, you will have everything that you need to be successful with the software. Guys, you are on a marathon journey. This is not a sprint. This takes a little bit of study. It takes a little bit of practice. It takes an awful lot of feedback. So we're going to learn the rules. I want you guys to practice, and I don't want you to be afraid of losing when you practice, but I also want you to embrace the idea that simulator is your safety net. And if you're not where you need to be, guys, there's no shame in being on simulator. We're not measuring things here. It's literally the batting cages, the driving range. It's shooting free throws when nobody's in the gym, guys. Getting better, creating muscle memory. And we're going to keep it real simple. We're going to talk about the high probability trend trade, and then we'll talk about the trades that follow. But I'm going to tie them all back to the lessons from the high probability trend trade so you understand that once you build this foundation, once you understand momentum and path, ladies and gentlemen, this is what opens the door. So, rule number 1, large chart needs strong trigger lines. Remember that the large chart leads the way. It's going to find direction, momentum, and it's going to let you know whether or not you have a clear path, guys. So Rule number one says strong trigger lines, but I wanna back it up just a second. Your large chart defines trend, guys. It defines direction. And it's, unless you're colorblind, and if you are, let me know. I have a fix. If your background is green, the market's going up, your highest chance of success will come from going up with it. If the background is red, the market's going down, your highest chance of success will be trading with that trend, looking for rules to be met to go with the trend. So green is up, red is down, green is still up no matter what your opinion is. When the background is green, things are up. In order to have strong triggers, in order to have rule number one met, you'll realize that the colors have to match, because it's your small triggers getting above the large triggers that paint the background green. And when your small triggers break above and away from the large triggers, which are wide, they're up in the direction of that trend, it's the space created between the small and large. Let's take a picture and vandalize it. It is the space created between the small and the large, and I want you to picture scissors. Ooh, that's a big fat scissors. Scissors that are open, that are ready to cut. Guys, those open scissors let me know that the trend is strong. In a downtrend, it's the same look. When the scissors are open, I'll give it both handles on this one. When there's space between the small and large, when there's a gap between, when the colors match, this is when the odds are favorable for the market to continue in the direction of the trend. So you're going to hear odds favorable momentum all day long in my classroom, guys. You're going to see it annotated on charts, OFM. Odds favorable momentum pushes a market. Odds favorable momentum is what it takes if you're going to try to take a trade on an area that's not broken yet. Odds favorable momentum even covers the mistakes that we tend to make as new users. And guys, when I have strong triggers up and strong triggers down, this is where that one bar on the large chart, it looks like it sprouts that tail or that wick. Guys, this is the best time to buy Fibonacci support on a smaller chart or to sell Fibonacci resistance on a smaller chart to continue with the trend, to continue with the clear path. So odds favorable momentum will always be your best look, but the opposite of strong has got to be weak. And I think it's important that you understand both sides of the coin. It's one thing to identify momentum because it means let's look for a trade. It's even more important to understand weakness when the scissors close, when the smalls work inside of the large, because now your advantage is gone. And I want you to say to yourself out loud, holy crap, my advantage is gone. Anything can happen up or down. Why am I looking for a trade? And guys, there may be trades eventually when you grow with the software, when you learn to read, but I'm going to stick to my guns that odds favorable momentum is always the best case scenario for a trade. When one line of your triggers works inside, when the scissors are almost closed but not quite, once you're a chart reader, you'll be able to gauge advantages and you'll probably still be able to find a short trade that pays. But guys, once both triggers are inside, it's a weakening, it's a slowing, anything can happen, and you can take a short trade. You're going to manage the hell out of them because the advantage is absolutely gone. So let's go to a live chart and let's take a look and see if there's any truth in this trigger stuff. Smalls below the large, they're wide, broken area, broken area, broken area. And then it goes all the way down to support where I don't have that separation. And look at the bounce. And then there's all that momentum. Ooh, there's one of those tails. And then they begin to weaken right in an area, and then there's a bounce. Oh my gosh. I do believe we may be onto something here, guys. Look at that weakness. That's where the reversal started. Look at that weakness. That's where the reversal started. So learn to trust a little bit. Learn to believe that strength is the way to go and that weakness, it's okay to do nothing, guys. And once you're comfortable with momentum, you're halfway done on the large chart. Now we got to look for that clear path. Now we have to make sure no termination conditions are present because that's going to give us room to our profit targets. And let's be honest, we want to get to our profit targets. So what's a termination condition? Termination condition is a Fibonacci-based indicator that may reverse the market. And guys, this is where this is where the large crowd makes decisions, is the easiest way to put it. This is where the large crowd makes decisions. This is where the buyers buy, and this is where the sellers sell. And guys, these lines on a large chart are where fights happen. This is where fluctuations and price happen. This is where buyers and sellers duke it out for supremacy. And you know about them long before you get to them. So let's define them. And one line is not more important than the other line. Let me be very specific on that. A divergence high isn't stronger than Fibonacci support, which isn't stronger than yellow 1-to-1s, which isn't stronger than a divergence low. It's horizontal lines on your large chart where decisions are made. So we're going to look for divergence highs and lows. And what these are is when the market goes down and pivots the other direction, creates that look that looks like a V. If there was a loss of momentum, you'll see a cyan line from a low and a magenta line from a high. If you don't know what cyan and magenta are, the words magenta and cyan are in the color that they are. So now you know. Fibonacci resistance, guys. When the market is moving up, this is an area that could stop it, create a bounce, reverse it. This is where fights happen. Blue Fibonacci support, when it's going the other direction, does the exact same thing. And then these yellow 1-to-1s, these are your omnidirectional. There's my big word for the day. Guys, if the market is trending down, these yellow 1-to-1s can behave as support. If the market is trending up, they can behave as resistance. These are where decisions are made. So, in order to decide that they're a termination condition, let's let price get to the decision-making point. So if price reaches resistance, and guys, resistance can be a divergence high, resistance can be yellow 1-to-1s, resistance can be that red Fibonacci resistance. When price reaches resistance, this is the first piece of the puzzle, right? Price reaches the area. I want all of you to ask yourself, where are my triggers? Where are my triggers? Are they below the area? If they are, resistance is a termination condition. No matter what the line is, resistance is a termination condition. Resistance may stop the market, and resistance could create a big untradeable bounce. And guys, it could reverse the market completely. So if price reaches resistance and my triggers remain below, absolutely no trades into that area. If my large triggers roll from green to red, there's your reversal. This is now a strong top, guys, and a strong top is the precursor to the highest probability trend trade that you can take short. And a strong top is rule number one for a momentum trade, and a strong top is a rule number one for an HVA trade, and a strong top is rule number one for a white bar trade. All the trades you're going to learn once you're good at this high probability trend trade, guys. So learn to recognize a strong top. No triggers through, reversal, boom. Don't go long. And then the market comes down and it pushes all the way to Fibonacci support. And here's the cool thing. If you were in a short position somewhere in here, you knew where the market was likely to go. What a great place to take profits. But price reaches Fibonacci support, and you have to ask yourself, where are my triggers? Well, they're above support. Support's a termination condition. No trades into that line. Does it seem too simple? Price reaches the area, where are my triggers? If they're below resistance, if they're above support, don't trade into it. It might stop the market. Mark, there's no way, right? There's no way it's that easy. Price reached support, none of the triggers broke. Look at the reversal. Price reached resistance, none of the triggers broke. Look at the reversal. Right into resistance, triggers didn't get above it. Oh man, right into 1-to-1s, triggers didn't get above it. Egads. Divergence high and 1-to-1s and resistance, and the triggers didn't get above it. And we went down right to a divergence line that created a big, ugly bounce. Ladies and gentlemen, I can't make this stuff up. I don't have to go cherry pick pictures. You're watching it live right in front of you. So, can you give me a why if you're with me? If price reaches an area, all you have to do is ask where your triggers are. If the triggers don't break, sit on your hands, do nothing. It's that easy. It really is. The problem is avoiding that feeling of that you're missing something because you didn't catch a short to the area, right? So, areas break. I'm going to tell you right now, areas break. If they didn't, we would rattle in between two lines for eternity. So, what's it mean to have an area broken? When the small triggers and the large triggers get south of support, Support becomes resistance. The path is clear, the area is broken, and your path will remain clear until you reach the next area. If smalls and large get above resistance, resistance behaves as support. Guys, very often you'll see these pullbacks retesting the area. You're going to be able to find those for an entry quite often. But guys, there's this transition, right? Price reaches resistance, my triggers are below, it doesn't break until then. Is it possible that there could be 15 bars worth of nothing to do? Is it possible that there could be 12 bars worth of nothing to do where you sit on your hands and you wait because you'll never know if it's going to break or if it's going to hold? Guys, I'm telling you, for the brand new users, this is it. This is the easy one. Either let it be a termination condition or let it be a clear path. And look at this. There's Exhibit A too. All the triggers get below and the path is broken, and look what it did. It pulled right back and used it as resistance. Pulled back, used it as resistance. Came through, tried to pull back. It used the resistance as resistance, right? And there's more of those tails. So, brand new users, it's either a termination or it's a clear path. And what that does for you is it opens the door for the next trade, for the second trade. And this trade is going to be on your plan, guys. And I'm going to cover these. And this trade is what we call a 50-50 trade. And I'm not going to lie to you. You could call it a straddle trade if that makes you happy. Straddle's fun to say. You could call it a one up, or we'll call it a one above, one below trade. I don't care what you call it. In the plan, it's 50-50. But what does it mean? When 50% of my triggers, the small triggers, 50% of my triggers have smashed through the area with odds favorable momentum, but 50% of my triggers have remained above that area. 50-50, pretty clever, right? What does that mean? That means that this fib has the potential to break because of that outstanding momentum, because the small triggers have smashed. Guys, rule number 2 isn't met because the small and large aren't below. This will be your first, not fist, medium. We talk funny when we type, right? Medium probability trade. This will be your first medium probability trade. What does that mean? That means that most of your indicators line up. You've got the trend, you've got the momentum, but a small issue exists. The path isn't clear yet. That means that you're going to have to use your chart reading to identify the problem, that you're going to have to use your chart reading to manage aggressively, that you're going to have to use your chart reading to make sure that you don't enter a trade with the potential when the potential has gone away. I'm going to give you a rock solid plan for this trade. What you're going to find is that this is the majority of your trades. Guys, the high probability trend trade isn't an all-day, everyday endeavor. The high probability trend trade typically sets up maybe 3 to 5 times a day. The 50-50 trade probably sets up another 10 to 15, but you got to take it the right way. I'm going to teach you how to do that. And guys, there's going to be times when your path isn't clear because of stacked areas. What do I mean when I say stacked areas? I mean 3 Fibonacci support areas, 5 points apart in your way. 3 Fibonacci resistance areas, 5 points apart in your way. It's going to happen, guys. This is 90% of your day. Waiting for the advantage. You know, when I was looking into trying to convince you guys that 90% of your day is doing nothing, I Googled, I said, man, how much do the futures markets trade? And the first answer I saw was 220 billion. And I used to have a picture that said, man, can you believe it? The futures markets trade $220 billion a day. And then I dug a little deeper. Guys, the futures markets trade on average $220 billion an hour. Trillions daily. Did you know that you only have to make $400 a day to be in a 6-figure income from your trading? $400 out of trillions is all you have to collect. So it's okay to do nothing. You don't have to be in every move, guys. Focus on having your rules met. And one of my favorite rule number 2 pictures, this was pre-Thanksgiving, guys. Fibonacci defines very clearly where the large crowd may react. This is 26 instances of rule number 2, keeping you out of avoidable losses. 6 times the area is broke. 26 versus 6, guys. So you and me and everybody else that day trades, we have a real short memory. And we tend to remember the one time that the area breaks and feel like we should start trading into areas because what if it happens again? Guys, you have to remember the 10 times that it doesn't, because that's where the rule came from. The rule came from, more often than not, let's go back to the live market, more often than not, rule number 2 is going to keep you out of trouble. And I'm going to say it right now, the easiest trades that you will ever take are going to be from a fib to a fib with odds favorable momentum. And guys, this is where the money happens. This is where it's easy. This is where it's effortless. This is where the butterflies aren't there and the sweaty palms go away. So that's what we're talking about right now, guys, is getting into the best of the best. So everybody's good with momentum, right? And you are all rock stars when it comes to termination conditions. And you know that the large chart defined the direction, the momentum, and the areas, and the large chart leads the way. And only when those rules are met will we go to the small chart to look for an entry. But guys, when I have momentum and a clear path, wild horses can't keep me out of that entry, because I'm going to be so precise that I'm going to use a limit order to buy or sell a pullback in an area inside of triggers. And what does that mean? Let's go to all my amazing pictures, guys. That means that I'm going to use a limit order to buy or sell that push from the small crowd, and I'm going to have it waiting right at an area. Fibs, midbands, or yellow 1-to-1s, right where they're most likely to fail, guys. And rule number 3 is going to give you a level of precision that is going to make your friends jealous. So buy or sell a pullback in an area inside of triggers. Why triggers, Mark? Great question. Because triggers are where price returns, guys. Large triggers suck price back to them on both the large chart and the small chart. So on your small entry chart, we have the large triggers that are native. They show you that momentum, that separation. We know that look. And we also have the large triggers from the large chart. We call them synthetic triggers, guys. And when these overlap, one on top of the other, I want you to picture 2 snakes riding piggyback. It should make you giggle. What this does is it says price may return to this area, guys. It defines it clearly where those price bars are most likely to return. But triggers aren't bouncy. Triggers just kind of suck price bars back. It's the areas inside of triggers that can create that bounce. It's these areas inside of triggers. Picture kicking a soccer ball and there's your wall. And you don't expect the soccer ball to go through that wall. Every now and then it's going to be a wall of sticks, and it will. But guys, this is where the bounces happen. So you've got to define this area. You've got to learn to recognize this area. And I'm going to encourage, I'm very encouraging, I'm going to encourage everyone in this room to give 20 days to being able to find the point where the market is most likely to continue. Because once you can do this, because of the advantages, sky is the limit. That was my horse noise, I guess. Sky's the limit. Once you understand momentum, path, and picking out this entry, you start learning all sorts of great things, guys. So let's do it. Large chart says up. Let's go look at a large chart. What does it look like when my rules are met? Well, it should look like this. Strong triggers. Nothing in the way. Clearing the problems. So when that happens, this is what my small chart looks like. And I get what's called the fear of missing out. And the fear of missing out is going to force me to make bad decisions. It's going to force me to get in early. It's going to force me to increase my risk. And it doesn't guarantee a winner. All it does is it guarantees a bigger loser if the trade doesn't work. So guys, when you see this happening, I want you to just calmate, sit back, relax. Wait for the reversal bar. Because the reversal bar signals the beginning of the pullback. It signals the beginning of the fight from that small crowd. And at the time of the reversal bar, this is where the magic happens. The first thing you're going to do is you're going to identify your triggers, large and synthetic. The tighter they are on top of one another, the smaller the ranges where those price bars are likely to return. So once you've identified your triggers from the highest point to the lowest point, you're going to look for the areas within, fibs, mid-bands, yellow 1-to-1s. These are the things that could create a bounce, but they're in different spots. So what we're doing is we're creating a window, a range, an area. I call it the window of opportunity. And this blue shaded area clearly defines where the small crowd is most likely to fail. It clearly defines where the market is most likely to bounce and continue with that underlying trend, the one that's going up with momentum and a clear path. And guys, once you can pinpoint this, once you use these words every time you look for an entry inside of favorable large triggers, you understand where the market shouldn't go. In any line outside of those triggers, beyond those triggers, below those triggers in a long trade, this is what we call where the market shouldn't go. This is where your advantage is gone. This is where your edge is no longer present. And guys, this is actually where you're going to put your first stop, taunting the small crowd. If you want my money, you're going to have to come get me where the market shouldn't go. And the great thing about futures, I don't care if the market goes up or down. I don't have a 401k. I make money to the short side the same way I make it to the long side. So when my trend is down, when my momentum is strong, when my path is clear, I'm going to wait for that reversal bar. I'm going to avoid the temptation of jumping in. And once I get the reversal bar, my brain has to say, where is the market most likely to return with this reversal bar? Well, it's most likely to return to the trigger lines, large or synthetic. Are they overlapping, one on top of the other? Draw a box. And then I say, but I need something bouncy in there. I need something solid for the market to bounce off of. Fibs, mid-bands, yellow 1-to-1s. Those are what the market typically bounces off of. So I'm going to activate a limit order 2 ticks below the lowest point of resistance because I don't want to miss this trade. And my large chart is dropping like a Led Zeppelin for you old people. And that's my entry for the high probability trend trade. And I'm 2 ticks above the highest point of support because they're skyrocketing. I don't want to miss that trade. And guys, there's some very common entries that you're going to go through. And I want you to just accept this as part of the learning. The first one is the, oh crap, it's going without me entry, guys. The red number 1 on there. And this is the one where you just kind of jump in and hope it never turns. This one is based entirely on the momentum of the market. And you're literally hoping nothing happens. This reversal bar says, guess what? Something happened. That's your exit, guys. If you find yourself scared and jumping in, that's your exit. But if you're using trend trade stops, but you're not taking trend trade entries, guys, you've put over $300 worth of risk per contract on that trade because your stop goes where the market shouldn't. Even worse than that, you've only given yourself $80 worth of profit. And guys, this is the one that kills accounts quick. The second one is when you begin to trust that entry, but you're still a little fearful. And the market's coming down, and guys, there's these fluctuations that happen on the small chart, and you see it start to go up, and your brain says, get in, get in, get in, get in. They're going without you. And I can't tell you how many times I see entries right at the very top of that bar that never even reverses. And this is fear again, and all you've done is created a bigger stop and taken away your profit target. And then eventually, with a little bit of study, a little bit of practice, you start taking great entries, guys. And great entries at the areas inside of favorable large triggers create very manageable trades. Because now your stop is as close as it's ever going to get. And your target is as far as it's ever going to get. And once you take this entry, guys, you're either going to get stopped out, but more often than not, you're going to get this magical reversal bar. And this reversal bar is confirming that the momentum is good, that the path is clear, that things are great, and it's going in the direction of your trade. And once you get that confirmation, your new stop is 2 ticks below it. And it's not at all uncommon to see Nexgen users take amazing trades, get the reversal bar, and only have like 2 or 3 ticks of risk. And even if the small crowd has a change of heart and comes down, guys, 2 to 3 ticks of risk, it doesn't hurt very much when you take a $30 loser, a $60 loser. It stings. when you jump in early and get out late and suddenly you're down $1,000 because you abandoned your plan and you relied on hope, goat. So you've got to learn this look. This is how we're going to study it. We're going to look at the large chart, and this is, guys, this is after the fact. Scrolling back, you've got 10 days worth of data. Holy rule number 2, defining consolidation. Guys, if I go to my large chart, and I want to put this on here. Whoops, where'd it go? And I have odds favorable momentum. And I have a clear path. I want to go to my small chart. And I'm going to circle the tail on the large chart. And let me scroll back. And guys, this is NASDAQ. Your entry is a little bit different, but I think the lesson will still be good. If I scroll back to 838, that's 938. Like a millennial, I can't tell time. If I go back to 838, where is that circle? There it is. And it pulled right back to a mid-band, right at the top of the triggers. And it never got below the triggers. And ladies and gentlemen, that's your money maker. That's your pattern. That's what we're talking about. So that was the NASDAQ. And let's see, where's my large chart? Let's just circle a tail here. That one only had the potential to break, but it did pull right back to a mid-band at the top of those triggers. That might have been a little tougher one. Maybe this one was better. Let's go see. Right back to the area, right inside of the triggers, all the way down to Fibonacci support. So guys, you don't have to be in a trade to learn how to trade. How cool is that? You can go back and just circle stuff. And if it fits the rules, that's your pattern. And if it doesn't, guess what? It's not. But you've got to go back and you've got to learn these looks, guys. And the fastest way to get to where you want to be has nothing to do with taking trades, brand new users. Getting to where you want to be isn't entering and exiting the market. Those mechanics are great, but you've got to be able to recognize some looks and patterns quickly, guys. And this is going to reinforce the lessons. This is Chart Reading 101. I give this out every day. I stopped giving it out for a couple weeks because, true story, I got a little butt hurt. Nobody used it except a few people, and all the people that used it did great, and they quit posting in my room because they were doing so awesome. So I took it away so you guys would keep posting. How is that for selfish? It's like the fireman that sets fires so he can put them out. Not really, I didn't do that. But if you take 25 pictures of strong triggers, and then you take 25 pictures of weak triggers, well, Mark, how long? Man, I don't have time to take all those pictures. Why not? Check it out. Watch this. You ready? Strong triggers. How easy was that? Well, why is it strong triggers? Because it's all red. Because the smalls are below the large. Space between. I don't care. Scissors open. Momentum. Odds favorable momentum. Rule 1 met. Guys, type it all on there. Because I promise you, if you do this and you point to that, you're not going to screw this look up. You know exactly what you're looking for. So do that for each rule. Strong triggers, clear path, and entries. Annotate the hell out of that chart. Describe what it means. Create the correlation between what you're seeing and what it means to you as a day trader. The advantage that it provides. Eventually, you'll piece them together to create a trade. But this is how you get to where you want to be quickly. And now the next objection. Well, Mark, I'm brand new. How am I supposed to know what odds favorable momentum is? I just started. Because I'm going to give you pictures. Guys, this is the high probability trend trade checklist. I built this for you. You know who you are. Is the market coming from a strong top or bottom? Well, I don't know. Is it coming from a no triggers through termination that reversed the market? If it is, guess what? Bonus, but not mandatory. You can still take a high probability trend trade without that look, but when you have that look, just adds a little something to the mix. There's your momentum, both directions. There's your weak triggers. The recipe never changes. I don't care what chart you're on, guys. You either have strength or you don't. That's it. If your rules say your small chart needs odds favorable momentum, but your small chart looks like this, guess what? you don't have odds favorable momentum. And momentum has nothing to do with areas. We use the trigger line to define them, though. If price reaches an area and the triggers don't break, guess what? Don't trade into it. You've lost your clear path. If the smalls break through but the large don't, well, you have the potential to break. That's not high probability, but there is a solid way to take it. But once those small and large, once they clear, man, go cat go. Look for your rules to be met. Pinpoint that tail. Take that trade because you have momentum and a clear path. And then there's your entries. Exactly what it looks like, exactly what you wait for, exactly where your order goes, and exactly where the market shouldn't go. Everything you need. That was my promise. Mark, I don't really have a plan. How do I put it together? Well, how about the KISS plan, the Keep It Simple Sunshine plan? I'm not allowed to call you stupid, it turns out. HR had a problem with that. The Keep It Simple Sunshine plan. Guys, this is a stepping stone. This is the A before the other 25 letters. This is the foundation that you're building. This is the plan designed to optimize your chances of success with the high probability trend trade. And then through simulation and study, class feedback, continuous practice, guys, you're going to make your own plan. You're not shackled to this plan. This is not the only trade. This is your first trade. This is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success, but most importantly, this is the trade that teaches you to read your indicators so that you can see the advantages so that you can take the other trades, guys. And there's a simple plan for consistency. Consistency, doing the same thing every time. Define your entry. Let it be mechanical. Let it be opinionless. Either the rules are met or they're not. In the KISS plan, you're going to have all the pictures. Strong bottom, strong top, strong triggers, terminations at lows, terminations at highs, and what it looks like and where you're getting in. Everything you need to pinpoint where the market is most likely to continue. And then once that happens, guys, that's when you pucker. Because now you've got to do something with that great entry. Great entries create manageable trades. And your management should be just as mechanical as your entry, guys. You're going to create a management plan. But in the beginning, the KISS plan keeps you focused on a couple things. It ensures that you're getting in at the area where the market is most likely to continue, which means that you understand where the market should not go. Your first stop placement is 4 to 5 ticks below the trigger lines. There's an ATM strategy, guys. These ATM strategies are preset. There's a lot of options for you. And if you're trading crude oil, if you're trading the S&P, it's going to be 12 ticks. That's your initial stop. That's not where your stop belongs. Your stop belongs where the market shouldn't go. Sometimes it might be 9 ticks, sometimes it might be 15 ticks. But guys, when you understand that once it blows past these triggers, you don't want to be in it, that's your stop. And you're either going to get stopped out, it's a normal part of a positive equity curve, but more often than not, if you're following the rules, you're going to get that reversal bar. And that reversal bar says, hey, we're doing everything it's supposed to do. Everything you wanted it to, everything you hoped it would do, it's doing it. Reduce your risk, 2 ticks below that reversal bar. In a short trade, 2 ticks above. And then I want you to sit tight, sit on your hands, put them on your head, roll back from your desk. You're either going to get stopped out for a small loss or it's going to hit your first target. And guys, the KISS plan is designed to get you paid. $100 away from your amazing entry is where you take off your first contract, guys, and you are paid, and it's in your account, and life is good, and children sing songs about you, and your palms stop sweating, and the butterflies go away, and now you have success, and success creates confidence. And to go with that success, you're going to go to break even. You're going to take every ounce of risk off of this trade with the hopes that momentum and clear path carry you to the second target. And your second target, brand new users, KISS plan followers, is only $200 away from your entry. Which means that one trade, 3 advantages, perfect entry, pragmatic stop placement, you just made $300. And guys, $300 a day, if that's all you can muster, and it's not, is a $75,000 year. Throw a break even in there, you're in 6 figures. The goal of trading is to get paid. The KISS plan is designed to remind you that it's not difficult to get paid when you follow a plan, when you have rules. And the more you deviate, the more you're likely to make mistakes. So there's two things you have to know before you get in the market, guys. You got to know why you're going to enter and why you're going to exit. Your entry should be based on patterns that have been proven to win more than they lose. And proving something doesn't mean that you heard Mark say it in the room. You're going to go back and you're going to do a little work. And really, I want you to try to prove me wrong. Jeffrey, I want you to wake up in the morning and say, that Novak fella is full of beans. I'm going to go circle these tails. I'm going to see if this really happens because I think he's full of it. Right? Bob, do the same thing. M, do it. Prove me wrong. Triple dog dare you. You'll be with me forever if you put this level of work in. But you also have to understand why you're going to exit. And this is the killer, right? Because sometimes your brain will tell you, hold longer. What if you make more? Imagine what you could do with that money. Guys, exits are losing your advantage when your targets haven't been hit. So if you're entering without advantages, how are you going to identify when they go away? They were never there. It almost does this circular logic stuff. So why will I exit? Because my advantage is gone and my targets haven't been reached, guys. And the rules eliminate the need to know what's going to happen. And the more you learn to trust your rules, the more you'll realize that. If I flipped a coin, right, and I knew, because I weighted one side of it, if I knew that that coin would land on heads 7 to 8 out of every 10 times I flipped it, should I ever bet tails hoping it's the one time? Let that sink in. If it's been proven to land on heads 7 to 8 times, 100 flips, 70 to 80 on heads. Would you ever bet tails? Of course not. That's ridiculous. But your gut tells you to bet tails every now and then. So what if I'm in a high probability trend trade, there's specific rules to get in, there's specific rules to get out. If I'm in a 50-50 trade, there's specific rules to get in, there's specific rules to get out. If I take a momentum trade, an HVA trade, different rules, different management. So in the beginning, simplicity pays dividends. Stay focused. Don't give yourself a lot to think about. You're brand new. You're learning to read indicators. And then finally, the last thing that I'm going to share with you, two things. The key to everything is having a foundation. I'm just going to lose that picture because I'm going to come back to it. Build a foundation. Understand the basics. Focus on what it takes to win. Don't focus on the winning. So for you brand new users, and this bugs you guys a little bit. I know it bugged me in the beginning. I blanket you with very conservative rules. I really do. I know that I do. I'm very well aware of it. We talk about the recognition of advantages, and I give you a very solid plan that optimizes your chances of success as you learn to read your indicators. So for you brand new users, you're going to hear me say that all termination conditions are bad and no momentum is bad and any area beyond the triggers is horrible. And the reality is that's not true. But those blanket rules are designed to increase your likelihood of success, to give you a better shot at being victorious rather than disgruntled. And you'll know through a little chart reading when it's time to make exceptions. The more time you spend with it, the more you'll see. So learn the process that yields the results, guys. That's where the KISS plan comes in. It's focused nothing but the process. And if you keep it basic, if you follow the simple rules, if you're okay not keeping up with the Joneses, you can find an extraordinary level of success. And I've watched it repeatedly over the years. And when I say don't try to keep up with the Joneses, this is your big red flag warning coming into the second and third hours when I start looking at other people's charts, because you're going to see trades that don't make sense to you. You're going to see trades that don't have the momentum that you were looking for. They don't have the clear path that you were looking for. They don't have the entry that you thought was the right entry. Guys, these are people that have learned to read their charts that post in this room that are still looking for feedback as they grow their plans. Focus on you. Trading is an individual sport, and question everything. If something doesn't make sense, guys, call me out on it. Make me say it a different way. That's my favorite part about the room, is when you guys ask questions, we get great lessons. And Morgan said it yesterday. Sometimes even a little smart-ass quirk turns into a pretty good lesson because I've got a million of them floating in my head. And every lesson that I have in my head stems from my own failures, from my own problems, from my own mistakes. And I just give you how I fixed them. So hopefully you don't have to work through it quite as hard as I did. So when we go into the second hour, everything is about momentum, path, and entry. When we go into the second hour, everything is about rules. No matter what chart you post, no matter what trades you take, no matter where your entry is, guys, I want you to go back to momentum, path, and entry. I want you to talk about it. Tell me what you see so that we can make sure you're seeing it right. Don't be the trade police. Please, please, please. And then we're going to talk about NASDAQ today a little bit because I had a request to talk about NASDAQ. So if you requested some NASDAQ help, I want to see some NASDAQ pictures from you. We're going to talk about what the fibs mean. We're going to talk about all sorts of stuff. I got you, Claire. But my promise to you was that I would give you everything that you need to be successful. Guys, there's a copy of my spreadsheet, and I've put in about, I don't know, 6 or 7 extra NASDAQ pictures for you guys that want that NASDAQ help. And then I'm going to give you this zip file. And this zip file has the chart reading, the high probability trend trade checklist. It has the KISS plan. It has the PowerPoints that I used to teach the classroom with. It has daily goals, has exit conditions. It has everything that you need. The only thing that you don't have is experience. The only thing that you don't have is all of the time in the market that other people have. So I wanted to share this, and I'm getting this tattooed on me. I've already decided. Kaizen. It's a noun. It's the philosophy of continuous improvement, becoming 1% better every day. So if you're anything like me, and a lot of you are, there's a lot of alphas in this room, and I'm probably a very egotistical alpha kind of guy. What this is it says, stop believing you have to be perfect in the beginning, right? M, stop putting that pressure on yourself. Bob, stop thinking you have to be a pro day trader. You just started, right? But every day, let's get 1% better. And the things that are going to get you focused on that 1% are going back and looking, talking to yourself about advantages. Maybe your 1% is just remembering where the rules happen today, and then tomorrow looking for the rules to be met. Stop putting the pressure on yourself to be a professional day trader in 7 days' time. Put the pressure on yourself to be a little bit better every day. I absolutely love that. I don't speak Japanese, but that's like my new favorite word. And when I do finally get it tattooed on me, I'll share it in the room. So I'm going to take 5 minutes. I'm going to walk around. Guys, crude oil is just killing it to the downside. The S&P is coming directly off of a termination condition. And the NASDAQ is directly into a termination condition, coming from a termination condition. And I want you to see this utter nonsense going on in the NASDAQ. Talk about rule number 2. You'll need some guts to get a tattoo. Mark, first one right? I don't think so. They hurt. Yeah, those are permanent, I'm told. For those of you that don't know, welcome to the room. I'm also a tattoo artist, so every now and then tattoos find their way into conversation. So I'm going to go stretch my legs. Ron's like, will you go already? You already said that you did. I don't know. You tell me, what are the rules? What are your rules for white bar trades, Morgan? Go look at them. See if you had some. But I'll tell you right now, that white bar trade, Morgan, is a freaking awesome way to trade from edge to edge. So I'll pull my range chart over. I'll see you guys in 5 minutes because you're following the rules, brother. Isn't it crazy how that works? One of my favorite phrases is when people go, wow, Mark, I decided to just keep it simple. Well, Morgan, damn it all to heck. Mark, I took a bunch of those trades. They seem to be working. But you know what? I'm not going to post them in the room and show you. I'm not going to ask for feedback to make sure that I'm following rules and not getting lucky. I'm just going to say it turns out I'm kind of a badass. Let me post it in the room, tell you that, and then I'm going to go about my business. Morgan, you know the rules. Show me what you're doing, man, because what if you made a lot of like just critical errors and you got lucky for a couple runs? And guys, I'm telling you right now, that's what we do. All right, good job. I'm going to take a break. Ron's yelling at me. Go already. You can't come back if you don't go. I'll see you guys in 5 minutes. Stand up and walk away from your screen for a minute, guys. See you in a second. Without taking a trade. Check this out. Don't trade into termination conditions. There's one. Strong triggers break areas. When support breaks, it behaves as resistance. I mean, come on. Guys, it's nothing but patterns. That's all it is. So I'm going to scroll up to the top and we're going to look at some of the pictures that were posted. We're going to talk about stuff that needs talking about. And see what's going on. So we're starting with the Gary show. And guys, I encourage you, drop 6, 7, 8 pictures in the room. Doesn't bother me a bit. I think it's awesome when you guys post this many pictures. I don't feel like I need to see all the way back to December 11th. I guys want you to remember, this is a 32-inch screen, and there's so much information on this chart that you just don't need to get feedback. So we're going to do the long and short of it, guys. Termination, 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 triggers roll. Gary's waiting for a pullback because of a strong bottom, and he's looking to take an opportunity long. Gary finds his opportunity long. momentum style trade and gets paid. And then as it goes up, he's still holding. He's using stop placement behind a pattern. He's looking for bigger targets. And news was about to print. He reached a fib, so he bailed. Love it. And then everything goes the other direction. Gary, this was a trend trade maybe, white bar momentum trade. It was right at news. So you didn't take it because news printed. Great job. And then there's your trend trade, Gary. And you were looking for HVA trades when you should have been thinking trend trade. And if you had thought trend trades, this was your entry and it ran forever. And I know this because I took that trend trade. And then like a Yahoo, I exited with second divergence, went to annotate my chart, missed my re-entry in the big move. And guys, that happens some days. It's okay to have one pick per, but there's just, and I'm not beating up Gary here. But when I pull these up, I want you to see something. And sometimes if you're looking an entire day back, if you're looking 9 hours back, guys, all I need on this large chart is that termination condition, right? Hey, check it out, termination that rolled. And then where is selection? So if I take all of this and just get rid of it, I don't need that, and I take this selection and I push it over there. There's my other termination condition. And then I take this selection, check it out, there's my entry. And what I've done, guys, is one, it's much easier to read. Termination, termination, looking for the momentum up, waiting for a pullback, right? And I have the same information. I have all of the same reasons. I have all of the same looks. And just, maybe I'm being a little selfish here. This pivot stop out at midnight on December 12th has nothing to do with me taking a long trade down here. Neither does this reversal, neither does this. So, guys, when you're looking at your chart, sometimes too much information is too much information. I'd rather see this stretched out, make it easy to read, instead of stretched long, believing that there's 1,000 things that you don't need. So, just something to think about, and maybe I'm being whiny. Feel free to tell me if I am. Odds favorable momentum, back of the bar clears price trouble. Odds favorable momentum, back of the price bar clears trouble. Sell one, sell second. You actually bought, Jen, but that's okay. So I know some of you are saying to yourself, what's that chili dog? I keep hearing about this chili dog. What the hell is that chili dog? Well, guys, that chili dog is this right here. It's okay, Jen. It's okay. So what is the chili dog trade? Guys, I've got so many of you trying to take it. I want to discuss it, and I want to make sure you understand it. This chili dog trade, why is it the chili dog? First, I'm going to pay homage to Ron C., who created this trade, who gave me heartburn in this room for 6 months while he studied it because I didn't understand it. And I couldn't wrap my brain around the idea that you didn't wait for a pullback to an area inside of favorable large triggers. This is not a high probability trend trade. This is a different trade that relies, this is a quick trade that relies 100% on momentum and clear path. And it makes enough money to buy a chili dog. It's not a home run. I love that. Guys, that's what the chili dog trade is. So in order to be successful with this one, and Jen, I hope that you don't mind me using your chart as an example. Notice that she puts back of price clears trouble. Why is that? Because every one of these lines, ladies and gentlemen, are where decisions have the potential to be made. Every one of these lines is where a fight can happen. Every one of these lines can screw up your good time. Look, like there's a bounce. And so by allowing the price bars, the price action to get away from that decision-making point by a tick or two, which is the back of the price clearing trouble, you've pulled price away from the decision-making. Guys, this is a different concept than a true clear path that we teach in the high probability trend trade. And the same is true here. Let it clear. But the cool thing is once it clears and you have odds favorable momentum, guys, it relies on momentum. You have to have strong triggers. You can take quick little snippets, quick profits, $110, $112, whatever. And what this does, guys, is this is like a little filler in between the trend trades. This is like a quick little hit. And Jen, you did it perfect. 100% perfect. What are the things that screw up this trade? Not having momentum, not letting the price clear. Great job, Jen. I love that. And then from the master himself. Strong triggers, backside clears trouble, backside clears trouble, and down it goes. And guys, look at the bounce that came off that 1-to-1. Why is it so important clearing that? That's all it is, Mike. It's a total scalp. You're relying on momentum to carry you. That's why it's quick profits. Have you guys ever looked at a small chart? Watch this. And this is the NASDAQ. Guys, this is a tiny little chart. Look at how many ups and downs there are. This is why it's quick profits, especially in something like the NASDAQ. I personally don't chili dog the NASDAQ, but that's just me. I don't really chili dog at all, to be honest. But that's your look, guys. Looks just like Jen's on a different market. Same rules, same looks, same perfect. Gary, I love this. There's those terminations. Gary catches the first one. There's the white bar trade. Got in late, Gary. Got in really late. Didn't give yourself a lot of room to trouble. And it cost you. And then it just turns into the trend trade. And sure enough, perfect trend trade. All the way up to Fibonacci resistance. Great job on that one too. Gary, you are rock star status this morning. Jen, odds favorable, strong bottom, no terminations. Entered 4 ticks above. Why so late? You big sissy. Nice exit though. Got out of trouble. Did not have a limit order. This was the error. That's okay. So Jen, this is NASDAQ. Do they have sissy in Australia? Okay, so there's a picture of you. Just kidding. I'm messing with you. Great entries create manageable trades. Big fat baby. And guys, let's talk about NASDAQ. And Jen, here's your trade and the great NASDAQ lesson. Waiting for the close on the correct side of the triggers. Guys, for those of you, Claire, NASDAQ trend trades, large chart rules are the same. Large chart rules are exactly the same. But remember that your small chart is a 13-2. Your small chart on the NASDAQ is the big chart on every other market that you trade. And these small triggers are strong. So when you have the rules met, when you have odds favorable, when you have a clear path, one of the things that you got to kind of temper is your patience a little bit. And there's a way to take NASDAQ entries with the highest chance of success, guys. If, and this is your secret, I'm giving it to you right now, keys to the kingdom, NASDAQ trend traders. Large chart rules met. Can't stress that enough. Large chart rules met. That's got to be the precursor for everything. If my small triggers are less than a full bar away, they may act as resistance. I have to wait for that close on the correct side of the triggers. I'm not going to fight those small triggers. If I reach my area and my small triggers are a full bar away, I'm going to get in at the area because even if they act as resistance, I've got virtually no risk. So let's see some of the pictures that I put in there with the NASDAQ. Close on the small side of the triggers instead of just jumping in at the mid band. I'm willing to pay that little bit for confirmation. And you know what's cool is doesn't that trade look just like that trade? Consistency, guys, same thing. Correct side of smalls. Man, there it is again. Hold on. This one says be patient. Do you see the small triggers, everybody? So here's the other one. See how the small triggers are getting above that reversal bar marker? That's my pump the brakes look. That's my don't go yet look. Wait, because these can act as support on the way up, the same way they acted as resistance on the way down. And then we're going to talk about this one too, you momentum traders. Iron Mike, that's a momentum trade. Ron's trade is a scalp trade, kind of. This is one that uses Fibonacci support. This is one that uses Fibonacci resistance, that uses one-to-ones for that quick little snapback, and it turns into a pretty low-risk trade. Another one that I like on the NASDAQ. Claire, that was for you as well. So, Jen, awesome job on that trade. Sorry, I went on a tangent and turned it into another lesson. I do that sometimes, maybe all the time. All right, guys, here's Ron again. Really? Odds favorable, clear path, perfect, perfect. And guys, here's a little insight. When the market is slow, he gives it a couple extra ticks past trouble. When the market isn't screaming, he makes sure that he gets through that area. So put that in your notes, chili doggers. And I'm telling you, you better send Ron a message and thank him for this trade, because he's done amazing things to help people get better at trading. And Pete was paying attention. Odds favorable, everything down. Let it clear trouble and got out at trouble. An absolutely beautiful Pete. How come nobody gave you a chili dog there? Here we go. I'm putting a chili dog on that one. Nice job. Marty. Same thing. Odds favorable. Everything says down. Things are rocking. In, out. Beautiful, Marty. Great job. And that was gold. Little base hit, the small account. Momentum still down. 50-50 on the fib. You take the quick pullback. You know where your stop should go when you get out of trouble. Pete, outstanding trade. Nice job, guys. Nice job. All right, Tracy, I'm excited to see you in here. Let's see what's going on. Sorry, I know you talk about strong tops and bottoms every day, but I'm struggling with knowing the difference between tops and bottoms and just pullbacks. Perfect. Tracy, you ready for a lesson? Are you in here? Guys, this is how you get to where you want to be. Let's do this, Tracy. Let me open up a big chart. All right. Let me find my big chart. There it is. Woo, holy NASDAQ. And let's go back to where we had some tops and bottoms, and maybe not every top and bottom. So Tracy, we're going to talk about strong tops and bottoms. And I'm looking for like a really good example with both. And I'll find it because I always find what I'm looking for. Wow, these fibs work, don't they? Holy crap. All right, here we go, Tracy. Perfect one. So I'm going to take this picture and I'm going to do a couple things for you right now, and then we'll get to your other pictures, and I'm not sure if they're the same thing, but that's okay. And I want to drop this in the room as well. This is just a little strong tops and bottoms for the new user. It's a Word document. Let me know if you need it in PDF. I probably have it, but we're going to define a strong top or bottom right here. So a strong top or bottom means, first, I have a termination condition that no triggers broke. A good example of that, Tracy, would be right here. Price reach resistance, all the triggers remain below. Does that make sense so far, everybody? We good? That's the first piece. Once I have that termination condition, if the large triggers roll, then it is a strong top. So this is for strong tops and bottoms. Why do we talk about strong tops or bottoms? Because it means that there was a decision made right at a key Fibonacci area that was so stinking powerful it reversed the market. Guys, strong tops and bottoms are great. They're the precursor to the best of the best. So let's look at it. And we're just going to start over here, and I'm going to use the shape thing. So here, price went up and went down. When I say roll, let's do a picture of what I mean to have triggers roll. Let me make it huge. And I'll tell you what, I'm going to do it with this one so that we can also do it on a strong top. Telling you, you guys make me giddy when you sound off in the room. Thank you. So let's do this picture of the strong top. Price reaches resistance. No triggers get above. This is a termination condition. All right, guys, give me a Y. This is like the best picture of a termination condition you're ever going to get. That is textbook. I could teach a class using this picture. And now, check this out. Put my box there. If the large triggers, let's go caps. Let's not. Here we go. If the large triggers go from green to red, they pinch. Do you see where they pinch? And roll. So when I talk about a pinch and roll, when I talk about triggers rolling, I mean that they roll over. They stop going up and they start going down. And you'll see it. There's that little pinch right in the middle of it. This is what makes it a strong top. Does that make sense, Nanda? All right. So Tracy, this is your strong top. And then let's see if we can go through and identify a strong bottom as well. Because you should know, right? It's got to be the both. So this is a no triggers through termination, and the triggers rolled. Do you see how that's a strong bottom? And the language is always the same. First it's a termination, no triggers break. If it rolls, it's a strong bottom. Doesn't mean it has to go up, but it is a strong bottom. This was a termination condition. The triggers never rolled. It's not a strong top. And notice when the triggers don't roll, it went up and retested. And then it becomes a strong top. But look at this. Not a termination condition, but the triggers rolled. Not a strong top. Not a termination condition, but the triggers rolled. Not a strong bottom. And a strong top or bottom, there's your strong bottom because of the roll. There's your strong top because of the roll. And then I'm looking for what we would consider a weak top. And here's a great example right here. Does everybody see how the small triggers broke through? It still pinched, it still rolled, it still went down. But because the triggers broke through, it's not a strong top or bottom. Does that make sense? The difference between the two? First it's a termination, then if it rolls, it's a strong top or bottom. Guys, we use the strong top or bottom, the no triggers through concept, to identify, to rely on that no triggers through, to define it as a top or a bottom. But here is the reality. If the market reverses and goes the other way, it's a bottom. If the market reverses and goes the other way, it's a top. It's a bottom, it's a top, it's a bottom, it's a top. But when it's a strong top, when it's a strong bottom, the market is more likely to go the other way further. So Tracy, don't get caught up on every pivot. So what do you think? Strong top or weak top? Weak. Perfect. But it's still a top, right? It's still the highest point of the move. So what does it mean to me when I have a weak top? Let's go into patterns. Let's talk about chart reading, you chart reading people. Sometimes when I have a weak top and it pushes down and I use the wrong indicator thing and mess it all up, the mid-band and the areas near the mid-band are more likely to hold. Why? Because no decisions were made at key areas, and very often you'll see a market that continues in the direction of that trend that's been going on for a while. It doesn't mean break your rules and trade against the trend momentum and stuff like that, but it does mean I'm not going short into the support. I'm not really even looking for one of those 50-50 trades at this fib, because this pattern says this is more likely to hold the market. Does that make sense? Great questions, Tracy. And again, there you go. It doesn't guarantee that it will continue, but at least keeps me from taking the loser into support. Awesome, awesome question. Let's go to the next one. All right. It's blurry. That's okay. I'm going to pretend like I have cataracts. We'll do this. So these are pullbacks. These are just whatever. The market's going. So Tracy, let's go through. And guys, this is where I start beating on dead horses. You ready? And I love this. And Tracy, please don't get upset with me. They're okay. I mean, they're red, right? Red's pretty. It means down. So let's try something. When I look at my chart, here's what I want to say. Do I have strong triggers? The answer is no, right, Tracy? You know that they're not strong triggers because you use the word okay. Language is very, very strong. So if I don't have strong triggers, I want you to see how easy life can be for you. Do you have a clear path? No. It's a 50-50 look. And then, Tracy, what does it take to have the highest chance of success of that area to break, to get both sets of triggers to the other side? Do you remember? It takes odds favorable momentum. We're looking for strong triggers to try and break this area. So you sacrificed a little bit of momentum and the path isn't quite clear. You nailed your entry. Your stop makes sense. But I want you to see something. I don't have odds favorable momentum here. I don't have a clear path. And I'm losing momentum here. You nailed your entry. Resistance inside of favorable large triggers. This is a pretty low probability trade. And I'm not sure what happened afterwards. That market came out of a range, so sometimes it has a little extra giddy up. But do you see how if you start talking about advantages a little bit, maybe you say to yourself, I should probably hold off just a little bit. I should probably let this one break. Hit target and broke even. I love that. You got out at the first sign of trouble, not a high probability trade, and you protected yourself. But guys, I talk about going back to advantages because when you know what you're up against, you know how to manage. And Tracy, if you took quick profits and break even, you did it perfect. Because if you know you're up against a little less momentum than you need and not the best path, get paid quick and don't lose money. And I think you killed that. You did an awesome job on management, taking that trade. And this is a good top, not a great top because of strong triggers. So Tracy, let's go back, and this is kind of cool. We'll see if the lessons worked. What do you think? Do the trigger lines being strong up have anything to do No worries, you'll get there. It's all a process, right? Now you're posting in the room and you're going to get feedback, and that, I promise you the feedback sticks. So what do you think? We reached Fibonacci resistance. The triggers didn't break. The large triggers rolled. Is that a strong top or a weak top? What do you say? Jeffrey says strong. Absolutely. Tracy, what do you think? Do you change your opinion? Awesome. So Tracy, one thing I'd like you to stop doing, and you don't have to because I'm not the boss of you, is I want you to stop being so flippant in your language that you type on your charts. Don't have okay triggers. Have strong triggers. Or have weak triggers. Don't have good, not great tops. Have a strong top or a weak top, right? Because that's like, hey, did you like the meal I cooked for you? It was okay. Well, what the hell does that mean? That doesn't mean that it was good, but maybe it wasn't bad. It's just okay. And I'm telling you guys, the words that you type on the chart are literally going to give you an indication of whether or not you should be in that trade. And if all I can say is, it's okay, why on God's green earth am I risking my money on a just okay trade, right? The chicken salad sandwich, it was good, but the salmonella jacked it all up. So make sure that it's good and pay attention to what you write on your charts. You'll find that over the long haul, it makes it easier to focus on advantages if you're very, very adamant about the advantages. So let's go and look at this one. That one didn't come from a termination condition, right, Tracy? So that one's got a little weakness, a weak top. Does that make sense? Strong top, strong bottom, weak top, and then this one hit Fibonacci resistance, the triggers didn't break. That's a strong top too. So coming into that trade that you took down here, you were coming directly from a strong top. Isn't that cool? And maybe that gives you just the little giddy up you need because of that strong top to make you believe that the sellers are going to give it at least a second chance. Awesome job, Tracy. Thank you. Thank you for posting. Guys, I'm telling you, if you have the courage to post in this room, I'll give you everything I have to get you next level. All right. Term with no triggers through. Love it. Mid-band is here, but gap theory isn't in play. Love it. White bar prints off of the termination. Fast triggers roll, and you buy the market. And you buy the market, and you get out. White bar trade, not an HVA, so I bought a pullback after the white bar. Love it. Perfect execution, Morgan. And then why do we get out at 76? What got you out of that trade? Just the, oh shit, it worked and let me get paid? Trust on, that's fair. That's fair, you just don't trust it yet. So check it out. See this line right here? That's the highest volume concentration of buyers in this bar. When I'm in a trade like this and I'm not feeling it, I'll go 2 ticks below that HVA area because that also forces them to create a down bar. Or I'll even just put it right here at 74.25. And if they're capable of creating a down bar, I'll get out and I still make money. But if they never make that down bar, if it just screams, pshaw, I can hold a little longer. And on these range charts, man, the risk is a lot less. Great trade, dude. Perfect execution. Guys, excuse me 1 second. My puppy needs to go outside. I'll be right back. All right. Puppy saved. All right. Pete's next. And guys, remember, if you have questions, ask them. And it's okay. So Morgan posted in the room. He goes, trust on the white bar trade. Yes, basically. Same thing I used to do with the trend trades. And Morgan, you're developing trust, right? But you don't jump out of trend trades anymore, do you? Because you took the time to trust them. And all you're doing is you're starting that process over. And I think this is one of the things that we forget. And when I say we, guys, I include myself in it. Every time I learn a new trade, every time I learn a new pattern, every time I have a different management plan, I've got to learn to trust it. I've got to go through that process again of taking pictures, of annotating charts, of asking questions. And I've got to not only see it to learn it, but I've got to see it enough to trust it. And exactly what Morgan said, Morgan didn't trust trend trades. Even though he knew the rules, he didn't trust them, and management became challenging for him. Until eventually he had the repetitions, and now they don't faze him. Now these guys have to take him out. He doesn't offer himself up anymore. So every time you find a new trade, guys, remember that the learning process starts over. Just because I'm a kick-ass trend trader doesn't mean that I'm automatically a rock star momentum trader or the best HVA trader or the coolest chili dog trader that ever met. So every time you incorporate a new trade, take the time to build the trust. Pete says, check it out, Mark. This is a bunch of nonsense right at a fib, but once it gets below all the nonsense and my path is clear, I can make money to the next fib. Beautiful. And now I'm going to show you guys something. $1,700 this morning. 3 trades. That's a small account. Great job, Pete. And can I show you guys just one more of those things? Chili doggers. Chili dog, chili dog. Let me show you something. When price reached areas, whoops, wrong one. When price reached areas, it bounced. When it reached the area, it bounced. When it was at the area, it bounced. When it had lines, it bounced. When it cleared everything, it ran. Does that make sense, everybody? Do we believe that decisions are made at fibs yet? Do we believe that these lines on your charts can create bounces? And depending on the trade you're in, those bounces can ruin your good time. And guys, this is why I teach the high probability trend trade first. Because once you have a little faith in termination conditions, once you believe in momentum, guys, there's a million opportunities out there. All right, let me see. Jen wants to show me all the sky, so here we go. We do not have odds favorable momentum here. Price clears trouble, room to target. Don't have any momentum here at all. And it worked out. So let me see something. You have noticed through study we have one up bar and then down bar. Price continues in the direction. All right, so I want to say something. Jen, when you have one up bar and then a down bar, price continues in the direction, right? There's a down bar, up bar, oh shit, down bar. There's got to be more to it than that, though, isn't there? I'm looking to see where we get, well, that was 2 up bars. This is me trying to make a point that it's an incomplete statement, I think is the best way to put it. There's got to be more to it. So let's look at your picture again and see if we can turn it into an awesome lesson. And I don't see, oh, you're talking about right here. You're talking large chart, up then down. Okay. Where's my large chart? Here it is. So you're saying that if price and triggers break an area of support, very often the market pulls back to it as resistance. And if the conditions are right, maybe there's an entry here that goes down there. Hold on. When price gets below, it pulls back to the area of resistance and down it goes. I love it. We're getting patterns here. When price breaks support, it behaves as resistance. When resistance breaks, it behaves as support, even with more bars. I love it, Jen. And I think what you did is you inadvertently recognized one of those important lessons. That when the path is clear and you pull back to areas, hold on, one more. Oh, I got to do this. I'm about to have to go strangle my dog, though. Not really, I would never do that. Check it out, Jen. Ba, 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 ba. I forgot what the lesson was that I was going to do with this. Dag nabbit. Clear path, I think, is what it is, and the pullback. And I have no idea what the lesson was that I was going to be. My barking dog totally distracted me. So if it comes back to me, we'll talk about it. All it is a bigger retracement. All it is, and I wish that we could see it over here. Where was it? I want to see what the small chart looked like. No, I like it. I think you're definitely onto something here. I really do. So there it is at 10:10. So let's look at the small chart, if you don't mind. So 10:10, this was it right here. Two divergences, not a termination condition, clear path. And it pulls to resistance, and all triggers are below. That was the lesson that I wanted to give you guys. So, I'm sorry. Give me 30 seconds. I'll be right back. £33 of fury, I tell you. All right, I remember the lesson that I wanted to give on this one. So I like this, Jen, and I think that your recognition there is so good. And I'm going to try and turn it just a little bit more, if you don't mind. Even if you do, I'm going to do it. So here we go. Check this out, guys. Let's use the basic ideas of termination conditions. And that basic idea is that if price reaches an area of resistance and the triggers remain below, that area is likely to stop the market. That's pretty basic, right? Like, that's 101. So Jen, here's the cool thing, and we're going to do this. So this area was likely to stop the market. This area was likely to stop the market. This area was likely to stop the market. But the challenge was, well, how do I know which one? Hold on, it's going to get better. Whoops, no. At 10:10. So this was it right here. We have already determined. Come on. Get up there. That this area, somewhere in here, is likely to stop the market, right? That's what our large chart says. Everything is down, things are down, life is good, it's all going down. But we're getting a retracement. And Jen, this is your one up, one down. And your one up came right to the areas. And there is your confirmation bar right off the area. Pretty cool, right? Following the large chart. Guys, this is the wrong side of everything. But you definitely have a puncher's chance if you wait for the confirmation bar. Ellie. No. I like that. That turned into a pretty good lesson. But it's cool when it all goes back to the very basic language, right? It all goes back to the very basic language. If price reaches an area and the triggers are below. And Jen, I like this because you noticed that you did get an up bar, but you didn't start thinking long trades because everything still set down. And then down it goes. So you're like, whoa, I'm coming off resistance. Life is good. It's clear. Let's giddy up. And that's exactly what you did. Outstanding. I love it. Your brain was spot on. I get excited when you guys post lessons, and you probably don't even realize that you're posting lessons, and that was a good one. Nicely done. That's a great chart read. All right, GWC, no termination condition, but 4 divergences most certainly is. 3 divergences in the same price range. So you took a shot off the HVA, got in on a little down up, and took it right to the mid-band, and then everything was strong up, so you just let it turn into a trend trade. And then you got paid again. GWC, this is awesome, dude. And let's talk about 2 things here. The first thing is GWC had weak triggers. So we just talked about the strong tops and bottoms, right? And one of the things that GWC says, he goes, man, there's no termination condition here. None. That's crazy. But GWC, you don't appear to have your synthetic triggers on your large chart. It would have been a termination condition all day if you had. But 3 divergences in the same price range may terminate a trend. So when you couple weak triggers, termination condition, and things roll, GWC did just an expert job of catching that. And guys, this is the Nexgen momentum trade. Termination, strong smalls up, break the area, snap back, giddy up. And he takes it off right at the mid-band because from a weak bottom, the mid-band may create a bounce. Nicely done, GWC. I'm telling you, guys, one of the things that you're going to do as you begin to grow with the software when you learn how to read it is you're going to start letting your reads find more opportunities. And then once he gets up, 50-50s are less likely to work from a weak bottom. Same pattern, it may go down. He lets it roll. He doesn't just arbitrarily jump in. GWC says, hey, check it out. Now everything says down from the termination, from the bad bottom, looking for continuation. That's amazing. And down it goes right to where he thought it would. And it lines up right with that HVA. GWC, great trading. Awesome trading. Just a little commentary for people that don't have Nexgen software. They may be tempted to sell that mid-band, but we know 3 divergences and mid-band outside of large triggers is a sucker play. Talk about compounding lessons right there. I love that. Guys, did you know that rules are designed to keep you safe? Is the best way to look at it. Rules are designed to give you advantages and more importantly, help you avoid disadvantages. And Pete, you're spot on, dude. A little bit of recognition creates the avoidance of an awful lot of heartache. All right, who's next? We're cranking through this. I love it. Jeffrey. I love that you're posting the pictures. All right, so Jeffrey, you ready? I'm going to go back to this picture. We're going to do a quick refresher. And I think you'll like this, Jeffrey, because I know you gave me the right answer when we asked before. So A termination condition is the first step in a strong top or bottom. Always. If you define a termination, you're halfway there. And then if it rolls, then it's a strong top. So let's go back to your picture. Price pulled up to Fibonacci resistance. All my triggers remain below. Jeffrey, can we identify this as a termination condition? Ladies and gentlemen, feel free to play along if you're working on your strong tops and bottoms. Do we have a termination condition up top here? Price reached Fibonacci resistance, all the triggers remain below. I'm using the language so that it sticks in your head. Price reached Fibonacci resistance, all the triggers stayed below. Bueller, am I muted? Do I need to reboot? Can you hear me? Give me a Y if you can hear me. I feel so alone right now. Okay, just making sure. So I'll answer it. Yeah, guys, that's a termination condition. Textbook, 100%. Did the large triggers go from green to red? Yes. Guess what? That's a strong top. That's an awesome strong top. It's a beautiful strong top. Great job. Does that make sense, everybody? And the great thing is, and man, I'm gonna share a story. When I started trading, I was terrified to post in this room. My brother ran it. And if you've ever been in one of my brother's classes, he's very direct. I'm pretty dry, but he's very direct. And I was absolutely terrified to post in my brother's room. I was terrified to ask for feedback. And guys, it stunted my growth. Because price broke fib. That's what I wanted to hear. So Jeffrey, beautiful. Guess what? We just fixed something. This is how the class works. So when we talk about termination conditions, let's go to the live market. Let's get a picture. And let's just reinforce a lesson. And let me find one that price breaks through. And I want to do this right here. So Jeffrey, and everybody in the room, for that matter, this is where price reaches the area. Does that make sense? Price reached the area. Where are the triggers? They're below. It's a termination condition. Once price reaches the area, ladies and gentlemen, we're done with price. It's all triggers. So when I go to the next bar, wow, and I blow through the next bar, sorry about that. Price is beginning to peak above, right? But the triggers define it as a termination condition. And price peaks above even further, but the triggers define it as a termination condition. Price goes even further, the triggers are still below, still a termination condition. And I love this because Jeffrey, that is so common. And I'll tell you right now, there's at least 10 people in this room that thought the same thing. Price getting there sets off the decision-making process. The triggers, no matter where price is after that first impact, will define it as a termination condition. I'm so appreciative that you put that into the room after the picture. So price got there, triggers didn't break. That's it. Always a termination until the triggers tell us it's not. Good stuff, man. I don't know about you guys. I think it's fun to learn something new every day. And it goes back to that 1%, right? So that may be somebody's 1% today. Clearing up that little something about terminations, right? So price is above, Jeffrey, but the triggers are still below. It's still a good termination, right? I love it. NASDAQ's like, hey, Mark, let's get a lesson in real quick. Still a termination. And then here's that 90% deal. By the time the small triggers break, if they do, we're right into the next fib. So we're in a total holding pattern right now. Let's wait. I love it, guys. You know, I get better every day too. Every day. All right, so I'm going to go away for just a minute. But before I do, I want to give a little classroom disclosure here. And my brother's probably going to freak out that I do this, but we'll be okay. And I'll find the one that isn't offensive. Because when I mess up, I don't always, I'm not always nice to myself with it. Let me see if I can find it. I want to show you guys what happens when you show up to trade and maybe you're not ready to trade. Maybe you're not in the right space mentally. That's not it. So give me 1 second. I'm going to find this trade that I took today. And I want you all to just collectively laugh at me. And that's okay. Hold on. Almost there. We're going full disclosure. There we go. All right. You ready? This is for you guys that are beating yourself up because you make mistakes. Guys, I teach this class. I teach people how to read indicators. I give you guys plans. I have a plan that is rock freaking solid. But last night, I had the craziest dreams ever. And I woke up exhausted. Have you ever woken up and you feel more tired than when you went to bed? That was me. And I got into the market, guys, and I couldn't wrap my head around my plan, and I was second guessing everything, and I wasn't in the right state. And I took the perfect entry, and I second guessed it, and I made nothing. I took profits at a problem area, and then I did an arbitrary stop placement because I was afraid that I misread it because I wasn't feeling confident. And it went right to my target, but it went without me. And there's a lot of times, guys, where no matter how good you are at this, you're going to have a human moment. And I just wanted to share that because I made a mistake. And the sad thing is I did it twice this morning. I did the same mistake twice this morning. And it didn't cost me any money. I didn't lose anything. But I didn't make the extra $400 or $500 per trade that I should have made on both of them. So when you get to beating yourself up a little bit, remember that you're not alone, and you feel like you are, but you're not. So when I come back, let's talk about whatever you guys want to talk about. So if you want to talk about white bar trades, if you want to talk about HVA trades, if you want to talk about momentum trades, if you want to talk about the NASDAQ, if you want to talk about underwater basket weaving, guys, all you have to do is post it in the room. Gary, we'll start with your picture when I come back.